Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Thursday, August 23rd, 2018, and this is the Daily Report for Gold and Silver. Strong downside pressure in the precious metals markets as dollar strength returns. Currently, gold is down about $11.40, almost a full percent decline at $1,191.90. We did send out a special trade alert to tighten our stops up yesterday, taking them to 1189.50. Low today, 1190.20. We'll talk about the stop placement and rationale behind it when we pull up our technical studies. Silver also trading under pressure, but down almost 2% on the day, a 27-cent drop. Silver currently trading at $14.48. Platinum losing over 2% at $776.90, and about a 1% decline in palladium at $908. As I said, it was the return of dollar strength that so heavily contributed to the declines we're looking at. Dollar gaining over a 0.5% in value, back well solidly above 95 at 95.54, and that is a 49-point rise. That also has put pressure on the equities markets with renewed concern of a trade dispute morphing into a full-blown trade war with the imposing of $16 billion worth of tariffs, both by the United States as well as China today. Dow trading down by 76 points, 25,656. Standard & Poor's giving up almost 6 points at 2856. And the NASDAQ Composite giving up about 9 points at 78.79. Traders, as you know, yesterday evening here in Honolulu, I sent out a special trade alert recommending that we tighten our stops to 1189.50. And on today's show, I do want to outline why we trailed our stops up to the price point we did and what actually triggered me sending out the trade alert. Obviously, yesterday after the FOMC meeting minutes were released, we saw gold pricing stall. I talked about the fact that what we were witnessing was a doji candle, and a doji candle can always mark indecision in the market or a point in time in which there is a shift to power. By the evening here in Honolulu, I identified a pattern simply called a three-river evening star. That's these three candles here. Very similar to the variation off of a three-river morning star that we got at the bottom of this. And what it was telling me is that once gold broke back below $1,200, and I look at that as a critical price point that gold needs to hold, the likelihood that we would see a continuation of this rally became very remote in my opinion. And quite honestly, I was not willing to risk any more than $10 on the trade. Now, we are currently still long the market. The low today was 1190.20, so roughly 70 cents from our current stop, but we are sitting right now at 91.80, so just a couple of dollars away. And traders, the rationale behind the price point we moved the stop to was based on going back 3 full trading days to the low and then putting our stop there, and that would be the lows right here on this short green candle. The key is this: we have seen the makings for a key reversal back to the downside, and when we look at the dollar index, we are going to see a very similar pattern emerge. I've just gone ahead and pulled up a daily dollar candlestick chart, and it's quite evident when we take a look at that not only was there a three-river evening star at the top of the market back a couple of days ago when gold prices bottomed, but we're also seeing that reciprocal three-river morning star in this particular formation. Today's move, both in the dollar index as well as gold, is absolutely significant. What is significant is that the dollar index is back above 95. That level of former resistance became support and then potential resistance when we broke through just a few days ago. In the same way, when we look at gold pricing, now that we have broken below $1,200, we could see a return to lower pricing. And in fact, I would look for a retest of 1178 in gold. Traders, based upon the minutes that were released yesterday and the market sentiment that at this point is looking at a high probability of an interest rate hike next month, I would expect to see continued pressure in gold pricing as well as continued strength in the dollar index. As a side note, I am sure that most of my subscribers are aware that as I speak, we have a hurricane about 24 hours away from actually coming close to Oahu, which is where I reside. Now, I am up in the hills, so I'm not worried about any kind of a surge in terms of water, but winds could definitely knock the power out, and if that's the case, I would be unable to do a report tomorrow. Depending on the severity of the hurricane will determine whether or not we will have a report tomorrow. This has been Gary Wagner, wishing you as always good trading. We will talk to you after the storm.